IPO. This is initial public offering, and it's a big bang. Big Bang IPO, that is LIC. So the entire country watching for IPO to gain the listed. Do they want to get listed gains? Or if they do not get the listed gains, what they are going to do? What is the retail investors portion, institutional investors portion? What will be the gains after listing? What is the pricing of the LIC? If something goes wrong, what will be your next step? So here you see the Big Bang IPO LIC. LIC share sale gets SEBI nod. SEBI has given its nod. Now what's the matter? Let's have a small look into this. India's market regulator has cleared the share sale proposal of state-run LIC Corporation of India or LIC, paving the way for government to launch India's largest initial public offering. Two people with direct knowledge of the matter said. The hotly anticipated public issue will test investors' appetite amidst the volatility caused by the Russian invasion of Ukraine and soaring energy prices. Soaring energy prices. Soaring energy prices. Soaring energy prices. So the nod for the LIC initial public offering has come amidst the soaring energy prices. What then? What if we get, and the geopolitical concerns are many. Geopolitical concerns. Timing of the LIC. Timing of IPO. Valuation of IPO. This 1, 2, 3, 4. Do they have any direct impact or no impact? So once the LIC is put on rails, it becomes a listed company and its shares will be traded. Shares will be traded. Shares will be traded. Shares will be traded. Everyone knows this. Everyone knows this. And if there are listed gains on listing, and everyone will be very happy. Maybe they are selling, the gains will be something 2.5 times. 2.5 times. The government is not certain whether to launch IPO. Government is not certain. Friends, understand this. The government is not certain whether to launch IPO in March or postpone it to mid-April. Expert committee meetings are on. A decision will be taken soon. The insurer received SEBI's approval in July in just 22 days, and just after one round of clarification from bankers. Despite the voluminous 650-page prospectus given for the regulator's scrutiny, the government plans to mop up about 75,000 crore by selling 5% stake in the country's largest insurer. So they want to gain 75,000 crore. Oh, well, let us do 75,000 crore. 75,000 crore. This is government. Government wants 75,000 crore by selling 5% stake in the country's largest insurer. 5% stake. After selling 5% stake, government will get 75,000 crore benefit. The country's largest insurer. The point is, this is the important point I wish to bring about. 5%. Out of its total stake, it is selling only 75,000. That is 5%. 5% stake. So after selling this 5% stake, will it keep quiet? After selling 5% stake, it cannot keep silent, and it has to keep on selling further stakes if it wants to build up good confidence among the LIC IPO, with the LIC IPO, for the people to keep faith and growing interest in that. Once done, this would be landmark not just for the government but also the company. From the point of view of the government, the next steps also need to be considered. Next steps. What are the next steps? Next steps. Next steps. This is the most important thing to keep the IPO interesting with the people. So what are the next interesting things that the government has to do if it sells 5% of its stake now? In short, LIC will have to disengage gradually from the government's disinvestment plans, especially from details which do not conform with the market standards. This may not be an issue going by the government's firm stance on privatization or disinvestment for the matter. A firm's stance on privatization or disinvestment for the matter. The way in which Air India was sold shows that certain bold decisions would continue to be taken if required. Also, the insurer will have to get into a quarter to quarter performance mindset, which is a feature of the listed companies. So, if it is listed in this quarter, they should compare this performance with the coming quarter. The company will also be constantly compared with its peers, which is inescapable. Hence, the market will be overly sensitive to every aspect of the business numbers and financials, with the success of every scheme being evaluated with its benchmarks. Benchmarks competition. Benchmark competition will be there. The same would hold for all the cost and productivity ratios, and hence LIC would be under the radar forever. Once it is listed, it will be under the radar and it will be compared with its peers' performance and every performance, and it will be totally under scanner and it will be screened every quarter. The LIC IPO is likely to be a success, assuming that Russia-Ukraine war eases in the next couple of weeks. If the war ends within 1 or 2 weeks, it's okay. But what if it does not end with this 1 or 2 weeks, and will lay the roadmap for other disinvestment proposals too in the years to come? The disinvestment. LIC senior management and the merchant bankers have been able to reach out to the global institutions including GIC Singapore, US based Capital One, Fidelity and CalPERS, besides domestic biggies such as HDFC Mutual Fund and ICICI Mutual Fund. According to sources, all the road shows that had been scheduled have been completed. There has been robust interest from the investors despite the current global situation and volatility in equity markets. The IPO dilemma. Turbulent stock market conditions triggered by Russia's invasion of Ukraine have created piquant situation for the government with regard to the initial public offer of Life Insurance Corporation of India, which was all set to launch this month. Markets are in turmoil globally, with investors stampeding out of stocks into safe haven assets such as gold. So people are now fleeing towards gold. Should the government go through with the IPO now, or should it defer the launch? A decision to postpone the launch will be relatively easier and less risky option. To postpone the LIC rollout, LIC IPO rollout would be less risky. If it is brought out and rolled out, it would be risky. Risky in the sense, many factors will be coming into play, and once they come into play, there is nothing that anybody can do about it. So it will be very happy if it is postponed. A decision to postpone the launch will be relatively easier and less risky. It will also be fruitless end to a year's hard work that has gone into preparing LIC for listing. LIC has been converted into a board managed corporate entity. Its accounts cleaned up by bifurcating shareholder and private and policyholder funds. Shareholder funds and policyholder funds. Political will to disinvest in LIC with many vested interests working to preserve the status quo. Some are trying to keep LIC, the employees and everybody, they are willing to keep the LIC as it is. But the government is interested to disinvest and send the LIC to IPO and sell its stake for the present 5% and get 75,000 crore. But it will be less risky if it doesn't roll out now. The risk with such a decision is that it may not attract excess subscription. The risk is, if it does not attract excess subscription, who is answerable? That will be ditching LIC if it is not subscribed excess. The likely size of the offer at between 50,000 to 70,000 crore is the biggest ever, and it surely needs the support of foreign investors to succeed. FIIA, foreign institutional investors, should come into play and subscribe excessively to glorify this LIC IPO rollout. If they do not come, we will see the backfall. Short-term investors and those looking for listing day gains may not have appetite to invest in prevailing market conditions. In prevailing market conditions, short-term investors who have an eye on the listing day gains are not much interested. But investors such as pension funds and sovereign wealth funds may find LIC an attractive bet, as they have long-term outlook and can look through short-term market turmoil. LIC is, after all, a murky financial institution with a 64% share of India's life insurance market and a massive investment book of 40 lakh crore. The domestic investors base is not shallow too and can be roped in with attractive discounts for retail investors and policy holders. A higher quota can also be carved out of them. The key, of course, is whether the government has the stomach to absorb lower valuation. How can the government absorb if it is valued less? That is, after listing, the valuation will be coming to our knowledge. Whether the government has the stomach to absorb lower valuation. The decision is not just financial but political as well, because there will be instant reactions from the oppositions that family silver has been short sold. If the valuation is less, we will say you have sold the silver for a throwaway price. What will be the situation then? Yet, that may be the best way to sell the IPO now. What's lost now in valuation can always be made good in the next tranche if LIC catches the market's eye. The LIC has to catch the market's eye and keep on reducing the stake, selling the stake from 5. Next tranche they will have to sell some more and come attractive in the market. They cannot do away with that. First they say for the present they are telling only 5%. But necessarily they will have to sell up to 50% also and even more to keep the fragrance of the IPO and the interest of the people. So the strengths of the company IPO are like this. The strengths of the company lie in having the first mover advantage. First, being owned by the government is a big positive as it signals confidence. Second, it has been run rather professionally, which adds to the value of enterprise. It has also been earning profits historically. Third, the large part of its investments are in government paper. The portfolio is protected and there is a steady stream of revenue in future. Fourth, the company has large investments in equities of blue chip companies and give high yield given that the purchases were reckoned in the past. Therefore, it is every reason for retail investors to consider this IPO as part of their portfolio, as the pricing is expected to be reasonable and well spread out to policy holders. There appears to be something for everyone. So pricing is well spread and everyone has some benefit out of this. That is what we initially feel and believe. But the government should keep on raising the stake of disinvestment to keep the IPO attractive. So with this I will finish with this. Please how the government will increase its share, will stake selling, please do. Once done, this would be a landmark not just for the government but also the company. From the point of view of the government, the next steps also need to be considered. Should the government keep divesting slices of company till it reaches 51%? Read again. Next steps also need to be considered. Should the government keep investing? Should the government keep investing? Keep divesting slices of the company till it reaches 51%? This is logical question. This is logical question because from the point of view of both market and the government's ideological stance, selling LIC from an ideological point was to extract value from the enterprise, in which case it cannot stop at 5% and logically should move upwards toward 49%, after which the more challenging decision of letting go can be considered, maybe after a decade or so. So it is necessary that the percentage of stake must be slowly disinvested to keep LIC IPO and its listed status active, attractive and beneficial. So thanks friends. This is Dilse with Ratnam. This is I and we have P and O, IPO. Oh, tomorrow I will show you PO also. So today I am showing only this is I. Tomorrow we will put P and O, IPO. This is Dilse with Ratnam signing off. Please subscribe my channel for additional news. And no wonder if things go wrong. Bye. Signing off.